Hey everyone.
Hi, happy
Hi.
Monday.
Hello.
Thank you for
Final.
joining us. We are the Hatch Homes Group, and this is our 2020 Trends and 2021 Forecast Monday Housing Market Update. Thank you for joining us. We've been doing this for a year straight every Monday, and it's really kept us engaged in every single thing that's happening in the market right now. We had about like twice as much content that we wanted to cover for this, and we cut it out. So I wanted you guys to know that we have a lot to say on this topic. If you have any questions, please reach out to us for a free strategy session. We are doing those for you, for anyone that you know that's thinking of making a move in 2021. Please share this video with them. But so we're going to get started. Just first looking back on the market, we also are going to go into where we are now, and we're going to leave you with our 2021 forecast. So a look back. COVID changed the way we did business as an industry as a whole. And there was a lot of things that we were already doing as a team in terms of, virtual showings, but we really had to step it up, right? We had to know how to do virtual open houses, how to show a home virtually, how to sell a home sight unseen to buyers. That came up. So we strengthened our digital document game. We had Zoom consultations, which has been really, really great to be able to do our business via Zoom. And we utilize video. Like, we've always been video. You guys know we've always utilized video a lot to market our properties, but we really had to step it up. And as an industry as a whole, realtors, they had to get on board with that. So we saw that a lot. And then, more meaningful connections with our clients. We were all going through this pandemic together, and we all had to really step it up, be there for our clients. We're human too, but we were able to kind of, I think you could all agree, kind of create some deeper connections, like personal connections with our clients.
Yeah.
Has been pretty great through
Especially
this.
since home has become so much more important to people, and it's on a different level than normal.
Yeah, exactly. Exactly. And the real estate transactions can always be a little intense for some people. So add a pandemic on it, that was a big thing that we were adjusting to this whole year. So, yeah, also looking back, there was a lot of things when this first happened. We remember talking to a lot of clients that were like, okay, great. Like, here we go. Housing crisis again. Let's get ready for the foreclosures to roll right in. Let's get ready for short sales to happen. So we really had to remind people, quite frankly, we still do, about how different this market is now than the last recession. So one of the big things that happened was, institutions, mortgage institutions, the government stepped up in terms of allowing forbearance. And they also, back before, when the last housing crisis happened, we didn't have forbearance. We didn't have this like lenders actually wanting to go through mediation if you couldn't pay your mortgage. It was just, you're going to foreclosure. We also didn't have people that had amazing interest rates or a lot of equity in their homes. So we have all that right now. Mm-hmm. So this graph right here talks about forbearance, because we're still going through forbearance. There's a lot of people still in it, but if you look at it compared to where we started, so of the over 6 million families that were granted forbearance, we're at 48% are not in forbearance right now, or have totally paid off their mortgage, which that probably means they sold their house, right? They were in forbearance and they sold, but that's 48%.
It's huge.
So yeah, that's huge. John, you kind of look like you want to say something on that.
Yeah, I think when you look at the people that are actually in the process of foreclosing and negotiating heavily with the banks, it's a small percentage of that 6.5 million. And the feelings we have is this is going to be absorbed into the industry. So when you see alarming news articles about a flood of foreclosures, I think reality is different.
Absolutely. especially when money is more affordable. And we'll go in that.
Good. So we're going to look at a snapshot of year-over-year changes, the key matrix that have happened in the real estate industry. So first of all, huge increase in showing, 64% increase year-over-year. And these numbers are pretty up to date within.
I think that's pretty unprecedented in a pandemic, that 64% increase in home showings happened when, you know, there was a lot of people that weren't sure they wanted that to happen, and that's a big increase.
Yeah, and 22% increase in mortgage applications for purchases, not refis, and then 20% increase in pending sales. Existing home sales, 26.6%. And then new home sales, and these are national numbers, 32% increase in new home sales. So a lot of builders are out there building and selling homes.
Can I just say something on that real quick? So new construction is a big topic. I think that's a really big figure to look at right now in Oregon. Builders can't build homes fast enough right now. Like in the spring, there was a ton of new construction on the market. I've had a few clients looking for new construction and contract on new construction right now. And prices for lumber have gone up so substantially that home prices for new construction are substantially going up right now. So that's a trend that we can talk about, you know, I guess for future, but that's happening right now.
I think, we're seeing multiple offers on new homes. We're seeing prices go 40,000 over list price on new construction. And another interesting thing that we might talk about at the end is what builders build in the future is probably going to be a little different because of what people are doing in their home, like work and have more kid time. Okay, so just going on to that bigger matrix, which that 63%, 64% for increase in showings. This is what happened. See this graph, see how the showings increased. And we get this number from when people use their lockbox, the electronic lockboxes. Except for a downturn here when no one wanted to touch a lockbox, we've seen a steady increase and huge increase over what it was last year. Mm-hmm. Now this is an interesting slide. This shows the home prices and it shows the inventory, and you can see as inventory's gone down, prices have increased. Now an interesting thing here is you can see the pattern, the normal historic pattern for prices to be at a peak around the middle of the year and to be at a low at the end or the beginning of the year during the holidays and the first weeks in January. Well, this is a national number. We can talk a bit more about Portland. It's a little bit different, but it's generally follow this pattern. And we see this year completely different. There hasn't been this change. And you can see the inventory level is around 2.5 months nationally. We'll see in Portland that's less. But it's an interesting slide, I think.
Yeah.
Okay, let's talk about mortgage rates because this has been driving everything. Mortgage rates as of yesterday, 2.71%. That's lowest ever. It's unbelievable. Almost free money. For most of my career in real estate, or a whole chunk of it, people have been paying double what they have to pay now for the same amount of money. Mm-hmm. Now, this is maybe a little bit confusing at first, but this is an affordability index. So it's a historic over the years from 1990 to today. What it does, it rates the affordability. The people that monitor this, they look at the average price of a home, they look at the average income, they look at the average mortgage amount that people have, or that, well, a down payment, and they work out an index, well, on a baseline of 100. They work out how affordable it is, how much, what percentage of your income are you spending on housing. So we see up until the crash in 2008, this was low affordability. The higher this number is, the more affordable it is, the smaller percentage of your income. So this orange-yellow color is after the 2008 financial crash and real estate crash, where we had tons of foreclosures, distressed properties, people didn't have much equity in their home, and there was plenty of inventory and plenty of good buys. So the homes were affordable here, but then they came back to normal, or more to normal. Big thing is, we can see that homes today are more affordable than they were last year. So when we look at prices, but we should balance everything with the interest rates and so on, we could see that actual affordability is better this year.
That's tied back. Yeah. I like how that all ties in together. Like, it's not just the prices of homes, it's also the price of money to buy homes, and how that affects your affordability.
Yeah.
Mm-hmm.
So this is Portland. So this is the RMLS numbers as of a couple of days ago. And we look at around the middle of the month, we get to see exactly what happened in the RMLS Greater Portland area for the previous month. And we see we're down to an inventory level of 1 month, which means that it would take a month to sell everything that's listed. Nothing else happened. So this is a yardstick, an amazing yardstick. This is the lowest it has ever been. Unbelievable. So we do have a balanced market is somewhere between 4 and 5 months. So it's indicating a seller's market. But a warning is that this isn't Portland wide. There's areas and there's price ranges where things are different, but on average, 1 month.
Mm-hmm. It seems like there's a difference between the inventory and supply sometimes too. Like, the supply is there, that it just sells as soon as it comes on the market. And I think that that's important for people to like kind of remember that.
Yeah, people that say there's no homes on the market, it's like, well, there are. You just have to be able to jump on them.
Yeah.
You know, like
They
they're not going to stay.
Yeah.
So.
Yeah.
So this is showing prices. Now in Portland, we saw that trend when I showed the inventory and the prices. This is what's happened for Portland. Median price on the bottom, average price on the top. And we can see that at the end of the year, we've seen a sort of a downturn in price, pretty much like we saw in those national numbers, except this year. So the whole thing's been turned upside down this year. Okay. So this slide shows the equity gain we've seen, and this is a national number here, but we see on average $17,000 of equity gain. And there's a couple of interesting things here. This 10.8% increase in equity, that represents over $1 trillion equity gain this year.
Wow.
Amazing. And then another interesting matrix here, or number here, is 38.2% of all homes are owned free and clear. We sometimes forget about those guys.
Big. That's really big.
Mm-hmm. Now, if we look at the areas nationally, we can see that we're a nice bit above that average 17,000. In fact, the whole West Coast is pretty high equity gain compared with nationally.
Yeah.
Some pockets like
Northeast coast, yeah.
but yeah, so a lot of equity there. Okay, let's look at the forecast. What's what we and what experts think is going to happen in the year ahead. And first of all, before we dive into that, and Michelle's going to dive into that a bit deeper, Angela, do you want to talk about this one?
Yeah, sure. This is a graph that we look at a lot. It's showing what new listings are on the market and the trends there. So going into the forecast, it's important to know where we are right now. And the one thing that I wanted to just point out is, obviously we have low inventory. So if you look at this graph, we're in December and it's low inventory. There's still homes on the market, but it's low inventory. So one thing I just want everyone to know is that multiple offers are a big part of our present and future. So, if you're a buyer and you're looking to get into this market, you need an agent that's going to be honest with you about what it's going to take to get into the home and have a multiple offer strategy, which obviously we do. We are on masterminds with the top agents in Portland on this topic in particular. So we have a strategy around this. For sellers, it's the same thing. It might be a great seller's market. You might be able to put your home on the market and get a good offer, but do you want the best offer? Then you need an agent that knows how to navigate multiple offer situations. So that's just one thing I wanted to point out on this graph in particular that shows you what is happening right now with new listings.
I also want to point out it's a little bit misleading when this chart goes down to 0. It looks as though it's going down to 0, but it's actually going down to 1,000. So even at the slowest times of the year, there are a lot of new listings or buying opportunities coming up. You just need to be on top of them and have the right agent.
And a good thing to keep in mind too with this chart is that, if we follow this trajectory, we're just having fewer and fewer homes to sell. So if you are thinking about selling, this is just such a good time to sell.
Yep, supply and demand.
So you're right.
Yeah, it's all about the classic supply and demand. Looking forward in the year ahead, obviously, I think it's apparent that it's still going to be a very strong seller's market because that demand is so high, with not only the low interest rates, but also because buyers are really motivated because they want that change in space with people from working from home now or remotely, with a lot of changing pieces within your home itself and how important that's become. So that demand obviously is going to be driving the market. And I think a big question that I get a lot and the big objection is, well, like it's a bubble is going to burst, because that's just been some things that it's a common language that we hear. And I just want to kind of point this one out. I think it's important for us to talk about this because these are projections in appreciation home price indexes from several of the economists in the country. And you can see that really about the average is about 4.5% of home price increases. And in a healthy market, that is perfect. Like a healthy year-over-year appreciation is around 4 to 5%. And so you don't see this number actually inflated in any way. And these are the projections going into the next year. And I think that that's important to remember, that it's not like our prices are going way out of hand because of multiple offers, but it is still healthily increasing. The unemployment rates are going to affect the market a lot. People will need to probably sell so they can get that equity if they're owning a home and they are worried about forbearance issues or foreclosure issues. I think knowing that they have that equity will give them a really nice nest egg. But it will play a factor in, who's able to buy, and the projections of what that is looking like is, you can see that it's going down. And this is an unprecedented year. So I think that those rates they'll come back. The jobs will come back.
Yeah. One thing I should point out, pre-pandemic, we were at just under 4%. And then at the pandemic, we went up to nearly 15% unemployment at the beginning. And we've climbed back. We've cut that in half. And then these are the what the economists are predicting for the future. So
Yeah.
getting back to normal in 2023.
They decline.
Yeah, that steady decline.
Okay. So let's look at the consensus view of work from home. This is a survey of different experts looking at what the actual last year was, what it is now. 21% of people working from home, probably higher in Portland. And then what is we're seeing, not dropping off completely, but there'll be double the number of people pre-pandemic that'll be working from home. This is going to affect a whole heap of things. What homes people look at, what homes are being built. And yeah, so exciting times and changing times.
Yeah, it's something that we'll be bringing into our marketing too, like helping our sellers, like let's figure out the way to get the work from home aspect marketed in your property. Another trend, just before we leave you, is, there's going to be a lot of new agents coming into the market. When the market's good, we've already seen it. I mean, agent count has doubled since I got my license, over a decade ago. So the one thing I just want to point out is that, you're going to have a lot of options. So it's important to make sure that you interview your realtor, even if they're not new, even if they're old, they're just not moving forward with the technology that they need to. That's really important. There's also tech companies coming into the industry. So you're going to start seeing ads for like different tech companies that they don't know real estate like we do, right? But they're going to offer you something enticing. We know about their offerings. We can talk to you about that. So we put together a list of top 10 questions to ask the agents that you're interviewing for buying or selling. So please reach out to us if you want to interview agents. We have the questions that will help you in getting the most out of your real estate transaction.
Yeah. Absolutely.
And of course, we've gone over a lot of great information here, lots of numbers. So if there's anything that you want in more detail, please feel free to reach out to us. We'd be happy to help and schedule a consultation with you to understand the market a little bit better.
Yeah,
Yeah.
Absolutely.
Thank you.
Happy
Thank you.
holidays. Happy New Year.
Thank
Happy
you.
New
and happy
Year.
New Year.